You should be able to see my Doge screen right now, a Doge chart, but I think it's better if I share the whole screen. Okay. So now if I switch windows, you guys can see my different windows, right? So just that I'm not starting and to repeat myself. If nobody says something, I guess it's good. Um, so yeah, this live stream is about execution and how you can basically trade almost all levels because the good levels usually always give a reaction, and we can always at least scout them, or let's say at least remove the risk. So we need to get rid of the expectation that I draw my so my original idea was that we are going to bounce in some fashion from this weekly demand here, which is also refined this 2-day partial, which was left here, and also at the same time total 2 hit. So I thought this is maybe a good idea to trade. I updated everything in real time here. So just that you see, maybe I try along here if majors align. I was not pulling the trigger because T2 wasn't hit yet. I took it because T2 hit it. I went in for 0.5% risk, and I said I was scaling here, and in the end I averaged into 15 cents, 15, so 0.159 on 1% risk. And I did that for several reasons. Even though the level didn't work, I was stopped at break even in the end, which is always a nice outcome because in the end, I tried to trade the level. The confluence was there, the level was there, everything was there, and it just didn't work. And you see, this is just the reality of these levels and of trading. The level can be as good as it wants, and you can have all the confluences. Sometimes it just doesn't work. And the selling is quite aggressive here. So we are always trying to, with these levels, we're always trying to catch the falling knife, and trying to catch the falling knife is dangerous. So we trade a reversal edge here with these levels. We don't buy into trends and nothing. It's a reversal trend. So if the level is not higher time frame most optimal, like perfect alignment of everything, where you would buy spot, for example, on big size, it's always dangerous, and you can manage your positions a little more defensive in that case. First of all, we nuked into this level, right? And it all happened on big volume, which is good. This is what we want to see into the level. And we can do it with all the timestamps. I guess it was 20, not, it was 9:11 p.m., which was around here. Oh, sorry, no, here. And I didn't pull the trigger here because total 2 wasn't hit yet, which already made sure I was not involved in all of this. And this could easily just nuke through, of course, but we have the major confluence, and usually if you have the major confluence, you have a level on a high volume chart, and you have a total confluence or Bitcoin or ETH, you can usually expect a bounce. And if it bounces, you have always the opportunity to just move your stop to break even. And if you get stop break even, okay, that's it. Just accept it. The level didn't work. Maybe it bounced afterwards and you're not in the trade. Or this happens and you're pretty happy that you're not in the trade. There are several reasons, as said, why I took the trade here. First of all, total 2. Second of all, Doge had this level here. And what I really like, if I really like the level, I just wait till the trend breaks because I can always enter in this area, and I'm still in the level, you see? I mean, this is, of course, it's Doge, it's quite volatile here, but in the end, it's a 1% difference, and I'm I'm stepping aside if I wait for the trend, which I didn't do here because there were other reasons for that. But if I wait for the trend to break, I at least minimize the risk that this is just falling through here and cutting through butter and hitting my stop loss immediately. And so this is one option. You just wait till the trend shifts. This is not, you don't trade the trend line here. You just make the trend visible to you and you wait till it shifts. And we had another trigger for me here, which was even on a lower time frame. This big candle on very high volume looked to me like the selling climax. And then we had several wicks down here, also here on high volume. Also, if you look at Binance, you'll see that the second candle here was on high volume. This one also here with the big shadow below. So this is some kind of volume spread here, which was nice. But the main trigger I had for this level was simply said funding rate or just shorts opening all into this move here, all the way down here. From this point on, open interest went up, funding rate went down, aggressive into this level, and I knew there's definitely shorts to be squeezed. Unfortunately, the trade didn't play out like I expected, but in the end it bounced. So I could have taken a profit here, because if I enter on low time frames, if I enter in this area, I usually have my stop loss wide, because if I have a limit order on lower size anyway, but also here I had it wide. And then once I saw the reaction and the reversal, I tightened my stop loss first of all. And then somewhere in this area, I think I went to bed and I said, okay, good. It's not the most optimal level we have. It's not perfect. I just want to have my stop at break even. My average was somewhere in this area, 15 and 9 something. And so I just removed the risk because I could. And why wouldn't I? Why wouldn't I? After such a strong reaction, I could also decide to take a profit here, which is already 1 hour almost with a stop loss like this. And you see, I didn't do that. In the end, afterwards, you could say, oh, it was the wrong choice and whatever. But in the end, if it reversed from here and we go for these highs, I would have been happy to don't TP so early. So there's never the complete perfect right answer. You just make choices. Sometimes they're right, sometimes they're wrong, and you just accept the outcome. I would just accept the outcome, yeah. And in the end, I got stopped at break even, which is totally fine for me. See, average 1%, all updated in real time. I put it on 2 different exchanges because, as said, there's a lot more to scaling, and I had a wide one, I had a tight one, and all that kind of stuff. But in the end, keep it simple. Take a technical level in between your stop loss. If you have a LO, you can always decide to go wide and tighten it afterwards after you see the reaction, or you scale in and put on small amounts of risk into the level. But always be aware of the fees, of course, so don't take 10 different orders because the fees will be very high, of course. And yeah, this is how I managed this play. And in the end, I tried to catch the falling knife. It didn't work. Great. I didn't pay a stop for that. This was the original idea with scaling and with execution tactics. I came into this position, which is the RR is a lot better, of course. And my entry, my average was also better, because if you enter here with the LO, you have the small reaction, you get already stopped out here, break even or whatever. It's a lot more likely that you have the urge to chase this move, because you say, oh no, it's going higher, and you're stopped at break even. In my situation, after I saw this, the big selling into this, I said, okay, good, this level is not going to work anymore. So bettering your average and scaling into levels is actually a pretty good strategy. Yeah, and you see, I was in a pretty good trade. If we went up for these highs, it's already a 10R. Up here is already a 3R. So this was a good trade in the end, even though I paid some fees and I got stopped at break even, but I was able to make more money. I was in a good risk-free trade, which could have made me a lot of money. And as said, you can trade all of these levels, because in the end, if you trade them with major alignment, if you trade high volume coins, if you don't trade some garbage shit, and you look for confluence and have a little bit of understanding of order flow and that kind of stuff, because usually, as said, if there is aggressive selling and there's shorts opening into these lows, usually they get squeezed in some fashion. And in this case, not too much, unfortunately, but most of the time you get at least this bounce, and this bounce makes sure you can already take a profit or remove your risk. Yeah, and then I did some more updates, stopped to break even. The first trade was a little higher, and this one got stopped first, and then we had a little bounce, and then I got stopped on the second one as well. Yeah, and this is just, as said, how you can trade all of these levels. And if you want to make sure to not always try to catch the falling knife, I would say you should wait for at least a small change in trend. So also this level, it's probably going to react. I'm quite sure of that. But I never have LOs for such levels if I'm not fully confident in them. And if there is some kind of reaction, and if I see what I want to see, I might as well do the same thing all over again. And maybe we get a bounce into this, and maybe I'm pretty happy to have a long from here. I'm not saying that we are going to go for 60 cents from here. This is also something we need to get rid of, because just because you look at this chart and there's some great crazy good levels up there, and you say, oh, it's going up there, and don't get greedy. If you take local setups, know what you're trading. If you take these local setups here, especially if you refine them on micro time frames or lower time frames, have realistic targets. And of course, if it goes to 60 cents, it's good, it's great, but it's, as we all know, not the most likely outcome that it's just going up in a straight line. And if it does, we usually don't have longs, because this is how the market is designed. But in the end, you can trade all of those levels, and you just make sure you're exposed. You're exposed. If it goes up in a straight line, nice, you have a long. If it goes down in a straight line, okay, maybe you don't get a trigger at all. And if you get one, and you have this micro bounce here, and you see it's not even visible here, but it did this little small wick. It was 2%. So this is you can trade them all. This is what I want to say. If you wait for alignment, if you wait for the right signals, you can trade them all, and I shared this setup today, because in the end, I'm probably going to do the same. We're pretty close to this level. The majors basically all align. Tether dominance is in supply. USDC is in its level. Could go to the supply, of course. We have Bitcoin dominance. We have total 2. We have everything basically now screaming for longs, but we have also a big uncertainty because of all of these war news. In the end, we want to have fear into these levels, but we don't want to have World War III and US bombing Iran, I guess. So it's probably wise to be a little more defensive right now. So I'm not too... I'm already good exposed spot-wise. I'm not interested in buying spot. I would buy some spot here if I had none. That's for sure. And as said, you can trade many things all the time if you know what you're trading. Have realistic targets. Also here, I took this small little trade in the hope to squeeze some of those new shorts to, just have a little counter trend bounce. Even though I know this is probably not going to work as I want to, because this is just falling off of a cliff here, of course. But in the end, you can trade so many things if you know how to manage your positions. And this is really what I want to hammer into your heads today. Because as I said, look at that. If you look at this time, there's nothing. But in the end, I came out break even and had the opportunity to make money for free, basically. More or less. Okay, I hope that answers all the questions, because I started this live stream today because someone had a question yesterday. I think he's not here, but maybe I find the question. And I think this covers it all. find the question. If you're here, please let me know and send me a message. But I don't think so. Must be here, I guess. Yeah. Could you show us how you manage scaling on yesterday's longs, please? Yeah, and I've prepared the Doge setup because I usually delete all of this afterwards. I prepared the Doge setup because in the end, it's always the same. You have a level, you have confluence, you have a reaction, and then it's on you to remove your risk or take a small profit. In the end, you always play the same concept. And if you do it like this, you can take 10 trades a day, you remove the risk, you're still at zero risk, and you can try to catch the falling knife, basically risk-free. As said, of course you have a risk, of course price could just nuke through and stop you out, but if you trade with confluence, you usually get the bounce. And if you combine it with other strategies like volume spread, order flow, all that kind of stuff, it gets even more powerful because, as said, I would never leave a limit order here. I just set alarms, and if I get the alarms, I go to the chart and I have a look at all of these metrics that I showed you, and then I decide if I want to enter this trade or not. And yeah, in this case, I got my trigger, and a very straightforward basic thing is to just wait for big volume. If you have this big selling, you want to see volume in your level. If there is no volume, there's something missing. And if you know how to read order flow correctly, you know how people are going to position themselves. You will see signs of absorption and all that kind of stuff, and this will help you to refine this even more. But in the end, it's to bring it down to simple points, have realistic targets, remove your risk as long as if you can. If it's not most optimal, higher time frame. Of course, if you have total 2 confluence, I know we would like to say, oh yeah, it's the perfect, most optimal level. But as we know now, it's never completely perfect. And Bitcoin wasn't there yet, Ethereum wasn't there, but they were at range lows. And to be honest, it just makes sense to expect some kind of bounce from a liquidity perspective. I mean, this could of course just nuke straight down. So I'm not saying this is not possible, but having some kind of bounce would attract new buyers, stop out some new shorts, create liquidity on both ends, and then nuke further down. Makes total sense, and I could argue 10 minutes, 15, 20 minutes, 2 hours why this is very likely, but I could also argue why it's not likely, and in the end it's probabilities, and I'm prepared for upside, I'm prepared for downside, and I try to prepare even more. Because I missed to take this swing short here, I was a little bit too zoomed in, and other than that, I had these great shorts from up here, and I missed this one. And if you have these shorts, all of this is not painful at all because you get paid all the time, and then you take out your money after big flushes like this, and you reallocate them into longs or spot plays or whatever. And if you don't have longs from the highs, these moves don't have shorts from the highs, it's usually a little more painful because you just watch and try to catch some. And I was not very successful in this move, catching some shorts, but it's never too late, of course. And in the end, I still made some money off of proper risk management and some smaller bounces and whatnot. But in the end, we shouldn't try to catch the falling knife all the time. What I can show you here, another example, is we usually don't go down and bounce straight up. We usually form something here, and more often than not, it looks something like a reaccumulation into the 618, maybe a higher high, maybe something like this, or we roll over and go down. But usually you don't need to try to catch the falling knife all the time, jump in front of the in front of the train, because if it's going to react from here, it's reaccumulating at least for a few hours or maybe even for a day, and then it goes higher. And if it doesn't, it would be nice to catch some shorts on these bounces, of course. And yeah, so this is basically another big part of my execution strategy. And I thought also this is very important to talk about because um, you really need to make a difference in your games. If you play spot, it's wise to scale around key levels. There is no perfection needed. You can have wide invalidations, all that kind of stuff, but you do that only in high time frame discount of your current range or the bigger picture, and on bad sentiment and on majors and all that kind of stuff. And you have a wide invalidation. You just enter. You have limit orders, all that. But trading with leverage is a lot different, as we know. And so should have you should be a lot more defensive with these plays and know what you're trading. And if you want to trade these falling knives, make sure you play them defensive. Yeah. Okay. I think from my side, I've said everything I want to say today. I hope the question is properly covered. If you have other questions, you can ask them now, of course. Okay. If nobody has questions, I would wrap up the stream now. And I wish you all a great Sunday. Enjoy it. Enjoy the weekend. And yeah, don't get caught up in all this real world noise stuff. Make good plans, stick to your plan. We know which the most optimal key levels are. Everything in between can be a nice trade, but you need to be defensive. And also don't take too many trades if you're not ready for that yet. I mean, I share a lot of low time frame stuff and whatnot, but I do this full time and I do this quite a while for now. And um, if you get mentally drained by taking so many positions, once the good ones come, you need to be prepared mentally, you need to be fit, you need to have energy, all that. And if you trade too many levels all the time and you're mentally so drained, you're not ready for the good ones. Because if this comes for Doge, or if this comes for ETH here, it's going to be very, very tough to pull the trigger, I guess, because I would argue that this would probably come with a lot more fear, and who knows what will be next. And also tomorrow the TradFi market's open, and then as Manitor wrote, I'm also very curious to see what the TradFi market does once it opens and what tomorrow will bring, because this could, yeah, it could be the peak fear, it could be the beginning. We don't know it yet. We know it's fear. We know we are close to key levels, so it's wise to look more for longs from now on. But as said, we know where the most optimal key levels are, and if they come, it's probably gonna pretty bloody and noisy and scary. So be prepared, make a plan, imagine what it will look like, and then you're ready for that. Others dominance chart 3-month. Can have a look, of course. I mean, it's hitting demand here. So all majors basically hitting demand or supply. Everything we wanna see. We hit all key levels, and I mean, yeah, we're losing the swing low here, which is not the best look, of course. But we have also a very strong demand here. I mean, this move was really insane. And I'm not too bothered about others, to be honest. I just use it as metric for, is it risk on or is it risk off? Because I just trade majors. I trade Bitcoin, ETH, Doge. I had a look at TRB today, but this is yeah, I'm really not interested in this. And so other than that, I'm not too interested in others in general, but I know that if others perform good, Doge and ETH will probably also perform good. So I use this as a metric. And also just another confluence layer. And as said, this is strong demand. And looking at all of our majors, it's not looking too bad to look for longs here. But of course, anything can happen, so we manage risk, we stay prepared, we make plans, and we think about what we don't want to think about, which is also important because we all have our certain biases. We all want something to happen. This doesn't mean it will happen, so it's always good to have a look on the different opinion and one that's maybe a little bit uncomfortable. And yeah, as said, key levels are clear. Stay ready, stay prepared. And other than that, if there is no more questions, I would wrap up the stream now. We can all enjoy our weekend. And yeah. Okay, guys, no more questions. All right. So have a great weekend, have a great Sunday, and bye-bye.